I mean, this open banking question intrigues me at a variety of levels, which was the motivation for trying to put together the panel, and I'm fortunate that it all came together at the right time. Who we have before you are Professors Markos Zachariadis and Pinar Ozcan from Warwick Business School. Markos also has an affiliation with Cambridge University. They are by far the leading experts in academia on open banking, period. And they come at it from slightly different backgrounds. Pinar is a management strategist who's interested in this area, and Markos is a computer scientist interested in this area. Both of them have worked together on this for a number of years. They will present the academic research angle on the topic at hand, and hopefully draw out some lessons that we can learn about how open banking will evolve in Australia in the years ahead. UK and Europe have had a head start, as you know, in that area, and they have been working on that for some time now. And then we have Lisa Schutz. Lisa wears so many hats that I can't quite remember exactly, other than winning awards every 2 or 3 weeks. She is an advisor to the government on open banking and related regulations. She's the founder of the RegTech Association. She's the CEO of Verifier. And I'm sure that she would be able to address some of the issues around open banking from a variety of perspectives. And then we have Dom Pym. Dom is a technologist as well as the co-founder of Australia's first bank that is built from the ground up digital. And it's one of the first challenger banks, neobanks, whatever you call it. And he will have some amazing stories, I'm sure, about the up journey and how he got here and his perspective on how this whole openness in banking is going to evolve. Now, we have people here from a variety of backgrounds. We have regulators, we have technologists, we have consultants, we have wealth advisors, we have fund managers. My background, before I became a business school professor, I spent 28 years in the asset management industry, so I still think of everything from an investment strategy angle. So we all have a lot to learn today, I think. And just to spend a minute on how investment strategists are thinking about this space, what we are looking at and observing is that not that long ago, analyzing a bank used to follow a certain playbook. You worry about the shape of the yield curve, what's the economy doing, what loan losses are we expected to see, and so on and so forth. So the known unknown, in the words of Donald Rumsfeld, had a certain playbook which was mainly cyclical. But now, when we start looking at banks and other financial organizations, that playbook still is important. If the net interest margin behaves a certain way, in the short term, earnings are going to be affected, and therefore ROE and price to book and so on. But increasingly, it's obvious to strategists like me that if you don't understand how technology is going to affect these banks and other financial institutions, how structurally their returns on equity will change, we will be looking at them and saying, oh wow, they are so cheap, and 10 years later they're even cheaper than they are today. So I'm here to learn from that perspective, and I'm sure I'll pick up a few things. So what we'll do here is we will start with the academic side of the story. Markos and Pinar have some research to share with you, and then we'll move on to Lisa, and then to Dom. hopefully we get that all done in 40, 45 minutes or so. And after that, we'll open it up for Q&A and see how the evening evolves. Thank you. Over to Warwick.
Thank you very much, Deep. Well, I'd like to thank the Australian Centre for Financial Studies and University of Monash, as well as our hosts here, YBF Ventures, for the invitation and for having us tonight. And just to say that we've been doing research in open banking for about 3 years now, but obviously open banking has been very much in discussion within the financial services and fintech ecosystem in London for about 5 years, at least. So we have loads of findings, and we've done a lot of interviews with experts and leaders of banks and financial institutions generally, and fintechs around the world, and specifically more in the UK, obviously in Europe, where there were an early starters, sort of to speak, and with the regulation that we're going to describe now. But this is kind of like a very short kind of snapshot of what we're trying to do, and our research also evolves somehow. So we're moving to different directions now with different projects, and we have funding from different institutions. But we'll do our best to give you an idea of what we're looking at, or where we at least started a couple of years ago. And usually with these things, and as academics, we want to study mainly from theory. So one of the first research questions that a lot of people were thinking around open banking was in finance, like in financial services sector, was not just whether it was feasible or not, right? So open APIs have been around for years, and within other industries like technology sectors, etc. So one of the questions was, what would be the business model behind open banking, right? So how would banks take advantage of this regulation to not only innovate, but also be more profitable, and what is the new model of play in the banking sector? And that's what we looked at literature in different industries. And one of the things you come across when you look at open APIs is that idea of a platform, right? So we have seen traditionally that platforms have quite a bit of an impact on different sectors, right? So we have examples from different industries, like for example, the car manufacturers, right? So if we consider BMW as a pipeline business model organization versus Uber, for example, who pretty much provide the same service, sort of to speak, right? So you get from point A to point B. The business models are different. So pipeline organizations, the BMW platform business model is Uber. And we can see there's huge difference in terms of, first of all, the age of the organization. So BMW is a century organization. Uber is about 10 years organization, less than that. Huge difference in employees, but also difference in market capitalization, with Uber actually being, more more profitable company eventually, not just market capitalization. And the same applies to other industries like the hospitality industry. If we think about Marriott being a pipeline business model organization where you actually have to provide everything yourself, buy the hotel, or the real estate, making it a hotel, hire people, and provide a particular service, versus Airbnb, which is essentially a platform. Right? So platform business model, they don't have any hotels. You probably have seen this quote on the right on social media going around, Uber is the world's largest taxi company, owns no vehicles. Facebook, kind of the largest media company, owns or creates no content, and so on and so forth with Airbnb as well. So the question is there, what it is that platforms do and how they actually make money. And that's where we look at theoretical viewpoints around platforms, and we have loads of that in the strategic management literature and information systems literature and economics literature. And one of the things we come across is that platforms create value by actually enabling interactions between different groups of people, right? From one side, you have producers usually, like so taxi providers or people who provide their apartments for accommodation. On the other hand, you have consumers. So what a platform does essentially is bridge the gap, is a matchmaker. It's kind of takes all the transaction costs somebody who would want to buy a service, and lowers them somehow and brings that service to them without the expense of actually going out and looking for that service, contracting, and doing all these things that we know from the economics literature in terms of transaction costs, like the certs cost, for example, the contracting cost, the risks around that particular function. So reductions in transaction cost is all they do, but there are other things, benefits when we look at platforms, but also fundamental ideas that we need to really consider as we try and adopt a platform business model. For example, one of the questions is how open your platform would be, essentially, right? Whether you want to welcome everybody, from the customer side, or where you want to welcome everybody from the consumer side. What are what is the rule book of actually opening up, and how you open up? How do you use interfaces, for example, to connect to certain individuals or organizations or third-party developers, as we say sometimes. So this is, very much at the essence of the platform business model. Another thing is governance. How do you actually govern your platform? There are different theories and different strategies for that as well. And there are two substantial benefits. Of course, platforms can scale more efficiently and much more quickly, and we have seen that. From this diagram, you can see right away that Uber, to get to 60 billion market capitalization, it only took them a decade, whereas BMW is much less, etc. So you can see the different years. The other thing is that you can unlock new resources of value creation that you would never unlock, right? So, for example, you can't just build a hotel overlooking the Acropolis in Athens or some other kind of monument, but you can actually find an apartment that does that, right? So in terms of value, and if you think of iPhone, for example, as a platform, which it is a platform, it's not just a device, you can't make Apple develop all 2 million applications that they have on the phone, right? But by opening up the phone, they actually did that. The same business model applies across many different industries and many different products. Another thing that we have seen, and actually the theory talks about, is what we call network externalities. And again, this is kind of like theoretical point of view from the economics literature. What we call network effects is how much value you get by connecting more and more individuals or producers across the different sides of the platform. And this is what Uber has done, for example. This is a very famous drawing by one of the investors who invested in Uber. There was a debate between a professor in finance at NYU and Bill Gurley, who is again an investor in Uber, in terms of how much Uber was valued. And the finance professor, Damodaran, was saying that it's about 5 billion, whereas the investor was saying, 17 billion. And in fact, the difference in their calculation was the network effects, because network effects actually make the organization expand and bring more revenue into many different locations, right? So the idea of the scheme was that more Uber cars will attract more people because there's less downtime in waiting for a taxi, and then as more people adopt Uber, then more drivers will want to get to Uber, right? And the same applies, with all platform business models and all platform products. For example, iPhone, you would probably want to choose iPhone because it has 2 million applications versus maybe BlackBerry that only has 1,000, right? So the more developers cluster around building more applications, more people will want to buy iPhone. And then as more people buy iPhone, there's a bigger market for developers. So then more developers will try and develop on the iPhone platform. So this is the concept of cross-site network effects. And there are other different kind of sides of network effects. We have done research, for example, in payment infrastructures on single-side network effects in terms of how more and more people, by adopting a particular payment network, you get more value as an individual, right? So this is a very basic concept of the phone, for example, right? If I only had a phone and Deep had a phone, we would get certain value. But then if suddenly 100 people had phone, we would get more value without doing anything, just because more and more people adopt the same particular technology. So this is another thing that is very fundamental to the platform business model. So our research question with Pinar, when we started thinking about these things around platform business models and how all these things apply to the banking sector, when there are certain things that happen in the banking sector that kind of radically transform the industry in itself, right? So we had a lot of the regulatory pressures. So in the UK, we had the CMA which is the Competition and Markets Authority, talking about creating more competition by opening up data. So there was a report back in 2016, or before that, sorry, 2014, talking about injecting competition into the industry by opening up the data in the sector. That was from the Open Data Institute, and then CMA picked it up, and then they regulated around that what we call open banking limited today in the UK. Same thing happened in Europe with PSD2, right? So all this is about opening up data to create more competition and create more quality products and cheaper products, or democratize certain types of products in the financial services industry. The same thing happened, at the same time we had different technological kind of developments, like open APIs becoming more and more mainstream, especially moving towards the banking sector. We had better security actually being developed. Also, next generation banking, the app economy was at the same time after the financial crisis. We had inventions like the iPhone, etc. So a lot of applications also raised the barrier of people's expectations of how the services are being consumed. So the banking sector was feeling a lot of pressure. Market conditions in terms of kind of reduced profitability from the banks. So after the crisis, it never went up. So people were looking of new ideas to provide new services and get new revenue streams and profitability for the banks. So all of that put together, people mentioned that as the perfect storm in banking, plus the regulation, plus the technologies, plus the new demand for banking services made people rethink their fundamental business models. And this is what we've done as part of our research. And Pinar is going to share a little bit of the findings about how we started that and what do our initial kind of results kind of say.
Thank you, Markos. So what we've done is, let me just go back here to tell you a little bit about this flower here, this comes from one of our quotes, actually, one of our informants who told us about how the banks have so far focused so much on the core of the flower, whereas the flower, if the flower is a human being, then all of the petals, which are your healthcare data, your insurance data, your pension data, the flower now, together with its petals as a platform, has a meaning, and that's that was kind of intriguing for us to think about it that way. And what we studied in order to understand the transformation of the banking sector is to basically ask ourselves, okay, so what if you're an incumbent in this industry, meaning you're an established bank? What does open banking mean to you, and how do you respond to that? Versus if you're a new entrant, how do you respond to open banking? How do you enter this market? And what are some of the challenges that you face when you're thinking about either participating or forming a platform? And so in order to study this, we've been spending a lot of hours talking to people. We do field research. So we've had over 50, by now it's closer to actually 70 at this point, interviews with key stakeholders in the UK. We're at the point of expanding this to both Europe. We have a grant to expanding to Europe, and at the same time I'm spending a little less than a year here in Australia in order to study the open banking movement in Australia. So our results today are from the UK, but hopefully they're very transferable and kind of they can shed light on what's happening here, and it seems like it's going very much in the same direction. We talked to incumbent banks, challenger banks, and fintechs, and also to a variety of industry experts and regulators. What we see so far is that there are two types of platform formation efforts that are happening. The first one, the color of money on your left, are the platforms that are being built by incumbents. And here what we see is that the incumbents typically have a choice of either building a platform, an open banking platform themselves, meaning they create the platform, they do the IT themselves, but more importantly, they also invite and make the deal with the fintechs that will go on that platform in order for the customer to have choice on that platform, not just your product from your own established bank, but also from all those fintechs that might be doing sometimes competitive things. Otherwise, if you don't want to do it yourself, there's also the option to outsource it. So there's also lots of fintechs that build marketplaces and then sell those marketplaces to banks. And that's also an option that incumbent banks have. And in a minute, we'll talk about what the challenges with each of these options are. On the other hand, we also have new entrants coming in and, challenger banks, as we have here. And we also have looked at what are some of the issues that a challenger bank might face. Obviously, they're a very different entity. They have advantages and disadvantages compared to an incumbent bank. And also account aggregators, the ones that don't have the banking licenses, but they still want to take advantage of open APIs in order to provide account aggregation for customers. So, going straight into incumbents challenges, one of the first things that we see is that there's a cultural issue in thinking of the customer as someone that you can share with others, right? The first thing that we see is that this is an actual quote from one of our informants saying, are you okay being NASCAR? Meaning, are you okay putting other people's logos on your car? And that being a shared, in a sense, product rather than your product itself. And one of the ways in which we see that is that when fintechs come onto a bank's platform or when there are negotiations, there's a lot of issue about whether the fintech will get visibility or whether it will be white labeled, how that relationship will work. This is one of the huge issues that we see. And what we see is that, of course, fintechs want to keep their brands. But banks don't want that necessarily because especially for important things like buying your first house or thinking about your pension, banks think of those as emotional moments in life when your brand relationship really matters. And if the bank loses that relationship, if that relationship goes to a fintech on that platform, then the bank sees that as a customer lost. And so that is one of the biggest issues that we see in a transition to a platform mindset. The second one is, okay, let's say that you're okay with kind of getting all these competing fintechs onto your platform. Well, what about the curation of that content? Are you going to just let everyone in, as Markos said? Are you going to be completely open to anyone and everyone who is good in their sector, in mortgages, loans, etc.? Or are you going to actually adjust it such that your products are always coming at the front and then other fintechs are always on the side, which is not necessarily a very competitive answer to the question. This is a second issue that they face, and what we see is that both in terms of selection and onboarding of the fintechs, there's very much a mindset of still being a pipeline business and not so much the mindset of being a platform business. Another thing that we see is, let's imagine that you are okay with all these fintech partners competing with you on your platform and let the best one win. You've come that far. There's also issues in terms of your organizational culture, and especially this is the first quote here is from a fintech saying, how do you move a giant at the same speed as yourself? One of the issues that we see is that a fintech may come to a bank, or the other one might approach the fintech. However, by the time the bank has done the due diligence and has decided about how to work with the fintech has run out of money because it takes so many months for the bank to actually do this whole thing, and their processes are so slow. And of course, this comes from the bank's requirements, in terms of compliance and being in a highly regulated industry. And the problem still continues because the authorities are not very clear in terms of who has the liability if something goes wrong in that relationship, if the data leaks or it breaks down, right? Because the fintechs are not as well regulated as the banks have been, naturally. And so the bank still is quite scared to kind of open up because they will have to bear the liability if something goes wrong. We also have the issue, of course, of the IT legacy, right? As we were talking just before this panel, the bank is very much structured in terms of product silos. And these silos don't talk to each other because they've been built in different decades to answer different problems. And when you try to cut a slice across them in order to build a platform where a customer's data is meaningfully in front of you, coming from these different pillars, that kind of doesn't work. And the problem with that is, of course, it doesn't work if you try to do the platform. It also doesn't work if you try to outsource the platform because you are still stuck in your pillars. And that's why we see with Markos that some of these incumbent banks, rather than trying to transform their IT, are just building a completely separate challenger bank and then slowly transferring their customers over to the challenger bank, because building it from scratch is a lot easier and safer compared to transforming these pillars into a platform. Moving on, if I can, that is. Okay, so delays in platform formation coming from the incumbent bank side. And of course, what we see here is that when there's a delay, there's also lots of innovation has increased in the market, then all these fintech platforms, all these fintechs that want to sell these platforms to the banks have arrived. And in the UK, we have the examples of BUD, for example, BUD. We have Open Banking Project, and we have Token. And these guys, what they're trying to do is they're building, imagine they're building the basket for you full with fintechs, and they're bringing it to the bank and saying, here's what you will offer to your customers, and I'll manage that for you, you'll just pay me. Of course, that's great, but there are some issues with that. On the one hand, we'll talk about challenger banks in a bit. On the one hand, the issue with going with that basket that comes from outside is that if that fintech wants to do a good job, meaning getting the best basket for you, then either you try to get that exclusively to yourself, or all banks that buy that basket are going to start to look the same. So you lose control over what fintechs are on there. And it just so happens that one of these best baskets in the market doesn't let you pick and choose which fintechs to put there, because they want it to be as competitive as possible, like Amazon or eBay. And that makes sense from their point of view, but if you're a bank and if you're losing your opportunity to differentiate from the others, then you might as well just not do anything, right? So this is one of the big issues. Challenger banks also are providing a lot of competition, and they're slowly becoming the nightmare of the incumbent banks. And what we see here is that they have different issues, and one of them is what we call the chicken and egg problem in platform growth. And what that refers to is that if you don't have the customers to start with, then you can't really get the fintechs because you're not attractive. And then if you don't have the fintechs, the customers don't come because you don't have much to sell, because you don't have a whole lot of products yourself. And so that's one of the main issues that we see with the challenger banks. Finally, we have account aggregators that are not banks, but they use these open APIs, they use new technology in order to put all of your account information from, let's say, HSBC and Barclays and Revolut or whatever, they put all of it together for you. But of course, because they're not banks, there's also some limitations in terms of how much they can grow. All of these guys have no baggage in the sense of they don't have organizational culture issues. They don't need to transform themselves. They're born digital, and they don't have these IT legacy systems, which is wonderful. But at the same time, as we say, there's the chicken and egg problem. They need to get customers in order to be attractive to the fintechs, and they need to get fintechs in order to be attractive to the customers. And that's one of the things that would be great to hear from you, Dom, actually. And finally, some of them have actually changed, and they said, look, it's so difficult to get customers in this business because it's also a very data-sensitive industry. Most customers, most customers will get a divorce rather than change their bank account, right? There's a change their spouse versus change their bank account. And because of this data sensitivity, a lot of these new players are not surviving, and they're going the B2B route, meaning they're going to banks and saying, let me be your platform rather than trying to survive as a platform myself, which of course has other issues in terms of whether they can make it in terms of working with the bank. There are some interesting solutions here. So some of them want to differentiate themselves and go to energy companies and say, look, if you sign up with me, I'm not just going to show you what you have in your financials, but I'll also show you your energy and gas and water, etc. The problem that they experience there is that if you think incumbent banks are archaic, gas and energy companies are, a different level of archaic, right? And so what we see there is that while trying to create a more attractive platform, they're actually shooting themselves in the foot because a lot of things go wrong in trying to connect themselves technologically to these archaic players. So these are some of the findings that we see, and it would be quite interesting, of course, to open it up. Let me see if I have anything else to say. Exactly. So here, a few things that we'd like to get your opinion on, particularly, are some of the issues with building a brand name. How do you get there? How do you get your average customer on the street who's not very tech savvy? And how do you grow together with your fintech partners? So one of the things that we see in the UK is that these challenger banks, because they can't get customers very quickly, they want to go to other countries such that they can build a critical mass. But then, of course, if they have a basket to sell, then that basket needs to be translated into German and Spanish and all. And of course, also in terms of, it's very expensive to be a bank. So to what extent, how much money do you need, and how long can you survive? Or is the exit strategy really to be bought by a larger guy? I think that's, just as a last thought, this is something we were talking about with Lisa just before. So far, we haven't really seen Amazon and Google and Facebook coming in, but it's with this new regulation and also with open APIs, it's very natural to think that that's something that, that especially incumbent banks should be scared about. It will be so easy, and there's a concept in platform literature which is called platform envelopment, which means that it's much easier for a platform from a different sector to come into a new sector and just, win it all, rather than a new platform to emerge in that sector. Because I only use Gmail for communication. It will be so easy for Google already knows everything about my life. It will be so easy for me to trust Google in finance already. Or if I do all my shopping in Amazon, it will be so easy again for Amazon to manage my finances. So is the real threat here these guys that luckily have too many other places to focus on and haven't come in, or is this really going to transform the banking sector? So that's a kind of a final thought that we want to leave you with. Thank you very much. I think we're going to leave the questions to later on, but yeah. Here you go.
Okay. That's fascinating research, and I think everyone knows that the UK is well ahead. I'm going to give you the lenses that I look at this from, because I think that will inform my comments. Firstly, so I'm CEO of Verifier. That's my day job, if you like. And what we do is we're a platform that puts people in control of their data in order to get better outcomes. So, if you like, I was thinking, what model are we? And I thought, actually, we're B to C to B, because we're basically, if you can imagine it, we're a giant plug. So our job is, at the moment, we solve for income verification in the loan process. So if you're applying for a loan, hopefully very soon, in pretty much all cases, you will get an invitation to opt into Verifier. You'll be identified. The lender is our data requester. You would be the data subject. We act for you, so we're a platform acting for the person. We go and we ping our data sources, which is the painful hooking in APIs process, and we actually ask for people's data we all have a right here in Australia, which is very much like the GDPR right of data portability. We all have a right to our data. So you can go and ask anyone, have they got data about you, and you can get it. But there's never before been a platform that enabled that at scale in a way that was actually useful. So we're privacy by design, which is a movement that comes particularly out of the Canadian market, and kind of really is a little bit ahead of what GDPR is now in Europe and what the consumer data right is here. So that's my day job. So as a result of that, we're all about hooking in data and connecting it. So in a way, we're kind of the glue of some of what was being described. So that's day job. In the course of developing Verifier, we realised that we needed to talk to the Information Commissioner and say, hey, we're here, look, privacy can enable data sharing. And we realised that we really wanted open data or open banking data. So as a result of that, I've personally done a heap of work submissions to the Productivity Commission and then Treasury, and now, to Deep's point of multiple hats, I now sit on the advisory committee that's helping guide the standard setting for open banking. So, and as part of that, I'm helping Treasury draft the laws, and ACCC would give them input on the framework. Whether they take that advice or not, that's up to them. So it's a really engrossing project at the moment from where I sit, because at the moment we have all layers of the process at work, in the sense that, and I don't know, how many of you are participating in that process at the moment out of interest? No one? Okay, Interesting. Well, for everyone's benefit, I would just like my shout out to the crew is, right now, this is a tectonic shift and enables the kind of platform, models that we're looking at there. What I would say is right now, I can't imagine, I'm not really normally in the policy arena, but I don't think there are many times in history where both the rules about a new system and the laws that govern that and the technical standards and the user experience are all being set at once, pretty much. So I would invite everyone you're all here on a Friday, lovely almost summery Melbourne night. If you're here, I suggest you go have a look and get active in this because it's really right now. So that's my policy shout out. So then with another hat on, in the course of this journey, we realised that we needed to really create an industry body to get the sort of fintech, regtech agenda heard. And so I co-founded what's called the RegTech Association, which is regulatory tech. So depending on the day, when I first started Verifier, I was just a data geek who just wanted more data sharing to happen. And then people said, are you a fintech? And I'm like, oh, what's that? Okay, that's us, I guess. And then people said, are you a regtech? And we're like, oh, what's that? Okay, we're that. So I ended up co-founding the RegTech Association here. And what I would say is, so I look at this, in other words, from a different lens. So in a way, we operate at a number of levels that enable those platforms and observe the play that you're describing. But with just two hats and then, let's see who's interested to ask on which side. But firstly, we did have that conversation earlier, and I do think, in a way, ironically, the open banking data conversation is a little bit of a red herring. If you want my strategic view of what's happening in banking, if you just think about your own lives, hands up who's used Uber. Okay. And out of interest, how many of you, well, I'm just going to give you my personal reflection, but I want to know what you all think because I am a data geek. One of the things I love about Uber is if you call a taxi, you never quite know if it's going to turn up, whereas with Uber you can see the little dot going around or whatever. Hands up if that resonates. Okay? Right, and the other thing is I never realised this irritated me, but I value property rights, so I do like using taxis, but what really irritates me is waiting at the end for the payment. Hands up who that irritates. Right. Now, I ask you, if you were in the taxi industry before Uber, you wouldn't have even thought of those two things as features, would you, right? So now just think about yourselves for a sec. Think about your personal finances and to the point of the product silos. So my assertion would be, I don't think anyone in financial services actually gives a rat's about my financial circumstances because they keep giving me sort of like brain-body disconnected messaging that they call marketing and basically are useless in the context of my world. So, maybe I'm being uncharitable, I don't know. If you think I'm not being uncharitable, please tell me who you deal with because, So my point is, that is what's ripe for disruption here. If we really put each one of us, in the centre of all this and made our lives easier in ways that we can't imagine, then I think that's the opportunity. And for me, the reason why I'm so passionate about the data bit of this is because, to the point, data enables automation and it enables that kind of change. So I'm obviously very passionate about it, but then I sit on the RegTech side of it as, Verifier day job, and I go, well, I'm not in the business of starting a digital bank, although, full power. But what I am very keen to do is enable people to get better outcomes. So part of that to me is the challenger banks and the purely digital banks, but it's also beyond banking for me. It's how do we get everyone's data that matters to them? So, for instance, wealth, banking, insurance, all the things that matter. So they're the lenses. So I see those platform changes as all about data, and I think that the data conversation is the bedrock. So at the moment, where my effort is, and then I'll hand over, but where my effort's focused is making sure our open banking regime is better than the UK. And I believe there are some reasons to think that is possible because I think what's really exciting about Australia is that it's framed as an economy-wide data sharing beyond sector. But there's devils in the detail. So if you want to know about the detail, talk to me over drinks.
Thanks. Thank you. That's awesome. My name's Dom, if you missed that, and I might just go back in time and then make some comments about what we've seen so far. I could talk to you all night, but I won't keep you here. I'm a software guy. I have a background in technology, and one of my colleagues, Mike, is up the back there. He's also an engineer. So we're less than 30 people in our company, which to try and create a bank with less than 30 people is, some people would say, insane. But even looking at digital banks around the world, we've seen, maybe 4 years ago, Bank Simple in the US was really the first of the digital banks. We've seen digital banks in South America and Europe, in the UK. They have hundreds of people trying to solve these problems that you're talking about. And I agree that a lot of digital banks and a lot of incumbents looking to reinvent themselves are actually missing the point. Like, open banking or open data is a way to improve the interoperability or the communication and the data sharing, collaboration, and whatever between these different companies. But the real problem is that banking is not solving living. It's our view. And it's very similar to what you were saying. And so we're really about two key things. One is technology as an enabler. So we like to use some marketing catchphrases, but we like to use it to explain who we are and what we're doing. Number one is that we're technology-led banking, as opposed to banking-led technology. That makes it very hard, in our view. It's a very subtle difference, but it makes it very hard for an incumbent to compete with fintechs, because the fintechs not only are starting green fields, but they're using technology from Google or Apple or Facebook or whatever. And those companies have huge scale and huge data. I'll just give you some examples. We were talking to a bank that spends, say, $100 million or more a year on infrastructure, and they manage that infrastructure themselves. And we came along to work with them, a big four bank in Australia, and we went to work with them and we built some infrastructure for them to basically provide the same service for $50,000 a year. Now, how do you do that? You do that with open source software. You do that with APIs. You let developers contribute to it. You do that with free infrastructure. You do that with scalable infrastructure coming from, so all the open source software we used came from Facebook and Google, and the data center came from either Google or Amazon. And so you don't necessarily, those incumbents in other industries don't necessarily have to move into banking. They can just offer their services to the banking industry, and then a mashup of those services can actually create efficiencies, save costs, or deliver a better customer experience. So that's just one quick example about how technology-led thinking is different than banking-led thinking. And we think that in the banking sector, that could make a huge difference to the way that we think about the outcomes for customers. Now, I mentioned living. So we say, banking, not living, not banking. And the reason is that we all bank, and we have to bank, and you need to transfer wealth between people or do trade or all those things. But actually, it's the outcome that I care about. So if I'm buying electricity, or if I'm driving my car, or if I'm travelling to work, or if I'm picking up my kids from school, whatever it is, that's the thing that I care about. The thing that enables it is electricity, water, banking. These are utilities. And we've heard for a decade or maybe two that banking one day will become a utility. I think there's a lot of credence to that. And I think that banking becoming a utility is taking a lot longer than we might have thought it would take. But actually, people want to power their lives. So why is an iPhone or an Android, or why is Google Search, or why is Facebook, why are these things so popular, Airbnb, Uber, whatever? Because they help us get from point A to point B, or they help us sleep somewhere overnight, or they help us communicate with our friends or our family. And so if you think about those problems, banks should be powering those problems through commerce, so helping with the monetary exchange, or helping to fund those things, but not providing banking. So when we start thinking about living, then now I said I'd go back in time. For us, we were building banking software. And we worked with, I've been doing a lot of talking, so I'll lose my voice soon, but a lot of seminars and presentations and things. But we were working with the big banks, and one of the big banks said to us, hey, we want to build a digital bank in Asia. We thought, that's pretty cool. What's your budget and time frame? So they have a multi-billion-dollar budget. They have a multiple-year time frame, and they want to work with IBM and SAP and Oracle and McKinsey's and Deloitte's and KPMG and everybody, and they want to roll it out across 10 countries. So I'm under NDA. I can't give details, but those sort of projects, we thought, well, that's interesting. We could maybe cut our teeth on building a digital bank in Asia. So we negotiated for a year and a half. Then we went to Hong Kong for the launch party after we'd been in San Francisco negotiating. This is for an Australian bank. We then went to Hong Kong for the launch party, and that was great. And then we went to Singapore for a year of project meetings and stuff. And meanwhile, in the background, Mike and the team were actually building this digital bank. And so we presented to a board and an executive of one of the pillar banks in Australia of what this digital bank in Asia could look like. And we built it in about 3 months and presented it to them. Meanwhile, it took us 2 years of faffing about, in all this sort of stuff, and they still couldn't make clear decisions. So they got a new CEO, they changed their strategy, and they pulled out of Asia. So that project sort of got, kiboshed. We thought that's okay because we still want to build a digital bank. So this is 2015 or something. This is before your Monzos and your Starlings and all these guys. So then we said, okay, well, what do we do now? Maybe we start our own digital bank. Well, that's pretty hard. And really the best example at the time was Simple. So I rang up Josh at Simple and said, hey, we're thinking about building a digital bank. What technology are you using? What are your challenges? And he says, we've sold the company. And I said, how's that going to go? And they said, we're going to spend the next couple of years migrating to this core banking system. So Simple went from sort of innovation and as a first mover to being acquired for cash, and then spent 2 years literally migrating their systems to a new licensed bank. So we thought, well, we don't want to do that. So one of the executives from the Asian project all the executives moved when the new CEO came, and one of the executives moved to another 4-pillar bank in Australia. And they said, we want to build a digital bank for Australia. And we said, awesome. So a year and a half later, it was the 22nd of December, we flew into Sydney. So it's one of the 2 that are in Sydney. Under NDA, can't talk about it. We pitched it to their executive and their board, and they said, we're not going to provide funding for the digital bank. Instead, we're going to modernise our core systems and upgrade our CRM. And that's a $1.5 billion project, right? So okay, fine. So by this time, we're getting a little jack. And we said, well, why don't we get our own banking license? What do we need to do to build a digital bank? And I'm conscious of time, so I'll make it quick. But I thought it'd be interesting so you guys know where we're coming from. What do we need to do to build a digital bank? We need $100 million just to start with, for some reserves. And then we need to fund the operation. We need a banking license, and we need a core banking system. On that journey of 5 or 6 years in the banking sector, we'd actually integrated, Mike and the team had integrated with half a dozen different core banking systems. So we knew we could do that bit. And so we thought, well, we'll get a cloud-hosted core banking system because that's all the rage. So we'll get one of them, and then we'll raise some capital. But hang on, we didn't want to have shareholders because we've been there before. I've been doing startups for sort of 15 years. So we said, okay, well, what do we need to do? Anyway, so then the UK legislation changed, and all these new digital banks were coming along, and everything was getting exciting. So Australia was a bit further behind. You couldn't get a banking license. So meanwhile, we built a banking platform here in Australia, and it turns out we're now the 5th biggest banking platform in Australia. The Bendigo and Adelaide Banking Group run our platform. We built it, we owned all the IP, we licensed it to them. It now does about $7 billion a month on desktop and about $2 billion a month on mobile. And we have 700,000 monthly active users. So it's a reasonable platform. And they said to us, what are you doing talking to all these other banks? Why don't we just do it together? So we're sort of urban legend now, but we quickly found that you can't just borrow a banking license. So we thought the money we can raise, the core banking system we can license, but how do we get our own banking license? So we work with the regulators and the bank and the lawyers and everybody else for the last sort of maybe year and a half or whatever to work out how we could do it. Anyway, we worked it out. So now we've launched Australia's first digital bank. And we operate under Bendigo's banking licence for the financial products that they issue. But we also have a very good working relationship and a sort of non-exclusive arrangement, which means that we're able to offer other financial products through our platform as well. So that's a quick introduction as to why I'm here tonight, I guess, and who we are. I have many views about the open banking stuff, and I'm happy to take some questions. I just want to touch on maybe 1 or 2 things that we talked about. I think that if anybody, I saw nobody put their hand up when they said who wants to get involved or who has been involved in the submissions or the legislation or whatever. We're all engineers, so we have 28 people in our company. There's me and my business partner who don't write code anymore, and then we have the cook. Everybody else is an engineer. And there's a tool called GitHub. I don't know if you guys know it, but Microsoft bought it recently, and it's sort of an open source way to share software. Well, all the open banking standards are available on GitHub, and all the engineers live in GitHub every day. They use that, and that's where we put all our source code and all that. So if you want to contribute and you're a software engineer, you just jump online and you can actually contribute without talking to politicians or putting in a submission or reading PDF files or anything like that. You can actually just put in whatever it is you think, and it's open source, so you can actually make whatever contribution you like. So that's one recommendation I make for people. The other is an observation, is that what we've seen, and along the lines of the research that you guys were talking about, what we've seen in the UK, is that there's no such thing anymore of a primary financial institution. So I might have a loan with one bank and a credit card with another, and a term deposit with another, and I might trade shares with another and have insurance with another. And I don't know the exact numbers, you guys know better than me, but I hear that in the UK it's more like having 3 or 4 or 5 or 6 or even 7 financial institutions rather than just having a relationship with one. In Australia we have 55 million bank accounts reported to the regulators. It's reported quarterly. And last time I looked at it might have been 2 quarters ago, but let's say 55 million, we have 25 million people. 18 million adults of legal age to have a bank account. So that means the average Australian has 3 bank accounts. So there's an 85% market share amongst the big 4. It's an oligopoly. So that means that if you look around this room, each one of you would have 3 bank accounts. And it's more than likely that they'd be with different financial institutions, not just one. And some of you will only have one institution. So we're already seeing in the last 10 years that trend. And so I would say that people might look at us as a new bank, and they might see that we offer the best way to use Apple Pay, because the big banks in Australia, there's 4 of them and only one of them has Apple Pay. So they might say, well, I want to use Apple Pay, I'm going to go with this new digital bank because they do that. Or we're the only bank in Australia that predicts your forward spend and then presents that to you so that you can forecast without doing any work and without opening spreadsheets. So maybe someone out there would say, hey, I want that feature. But we don't do home loans yet. We don't do insurance yet. We don't do share trading yet. And we don't do term deposits yet. So I can imagine, and I see it every day, that we have a lot of customers that use us for all of their spending, but they don't get their salary paid into our bank, or they have a mortgage with another bank. So I think that's just a trend that I just wanted to mention, that I think open banking enables that type of future rather than necessarily, like killing the incumbents. And the last thing I wanted to say before we go to questions, or however you want, whatever the format is just to have a think about these big banks that are scared. We've worked with a lot of them, and I used to work at SAP, so I've implemented core banking systems across the world, and including in Australia at all these big banks. And the classic innovator's dilemma is the best advice for them right now, which is if they don't actually innovate and disrupt themselves, someone like me will come along and disrupt them. So the best way that they can embrace this sort of new future is not to worry about margins and return on equity and net interest and all this. Forget about all that crap. Actually focus on disrupting themselves and maybe looking at these different ways of thinking about living, and then seeing whether a bank could offer a service to a human, a customer, a person, and then if they enable that, they will be here in 100 years. If they don't enable that, they'll disappear. So I think that disrupting themselves is as important as worrying about the competition.